Let's then introduce the participants of this exciting game show. We have Ruchit Jain of Angel Broking, Sarvendra Srivastav of Ascends.com, as well as Rajesh Sharma, who's an independent technical analyst. They are all joining in and fighting it out to be the winner of BNS in the stock game. Let's start off with discussing Ruchit Jain's portfolio. Ruchit, let's talk about the first stock that you have in your portfolio, a buy call coming in on ICICI Bank with a target price of 252. Is this the only stock that you like from the banking space, and why is it that you've chosen this one?
Yeah, good morning. Overall, we have seen that Bank Nifty has been the leader in this up move after the breakout of 8,000 levels in Nifty and 16,900 in Bank Nifty. So probably ICICI Bank was one of the heavyweights, which has taken the lead. And after crossover of 232 on lower time frame charts, the stock has formed this higher tops and higher bottom, continuation of higher top, higher bottom. And hence, I think this up move would continue in this stock. For intraday purpose, I have placed a target of 252 with a stop loss of 232. Positionally, I am expecting this previous highs of 256, 257 again to get retested in this stock.
Okay, that's ICICI Bank for you. Meantime, let's nail it down to Sarvinder's pick. KEC, why is it that you like the stock?
I think clearly the stock had been range bound over the last one odd month between 125 and 130, 32 on the upside. And with yesterday's price volume breakout and good delivery volumes which were witnessed on the stock, my sense is that the stock probably is a good medium term buying candidate as well. So, but for the game show and being the last day of the game show, I put a target around 141.40 for that particular call. But I believe that the breakout is good enough to take you all the way to 150, 155 minimum and even higher for the stock. So for the game show, I will put a target of 141.40 and a stop loss at 134.40 and would recommend buying KEC.
Okay, that's the word coming in on KEC International. Move on then and talk about Rajesh Sharma's first pick, which is coming in the name of Dabur. The target price set out is about 299. The stock is doing very well in today's session, up in trade by about 1%. Rajesh, how much more of an upside do you see for Dabur India?
Well, Kamya, morning and morning to our viewers. You see, Kamya, this stock has developed a nice uptrend. In fact, it has been moving nicely up in an uptrend for last 4-5 sessions. And yesterday, it did very well and closed with good amount of volume. I see the continuation of the trend, but the stock is now running into a huge amount of resistance, as it's got a good amount of resistance between 300 to 310 level. I think another life will start for this stock only after 310. Though this, what I like about this particular stock is that this stock is a long-term compelling story, as it has got a formidable portfolio of brands, and each brand is a super brand in itself. Not only that, it's got a formidable presence in India as well as in the Southeast Asian countries like Sri Lanka and Bangladesh and Bhutan, Nepal, etc. For the purpose of the game show, I have given a shallow target of 302, seeing the resistance level. But I think life will start for this stock only after 310. As the technical picture looks good and encouraging at this point of time, I think a dose of Chyawanprash will help the company. So for the format of the game show, I have given a shallow target of 302.
Okay, meantime, let's focus earnings. Emphasis reported numbers that saw the operational profits increase. Let's cut across to the management.
Digital risk does go through a bit of fluctuation. Actually, digital risk performed better than what I anticipated for the quarter. And as I shared the numbers, if you look at Q4 versus Q4 of last year, they have done exceptionally well. Overall year also, they have done very well. But if you look on sequential basis, there has been a decline. But that's the feature of the mortgage business. You will see some, volatility. We are working to reduce the volatility. We are closer to solving that than what we were in FY15. We still have work to do. So the business is not in a bad shape or whatever, but the volatility is an inherent aspect of that mortgage risk and compliance business.
So coming to you, you have provided for 32 crores as an exceptional loss for reassessment of future profitability. So has been provided for this quarter, or is there a lap over that we'll see in the coming quarters as well?
The loss exception which has been provided, it is for the future losses expected on this particular contract and for the next 3.5 years. So that has been provided. So you will, going forward, you will not see any losses with respect to that contract.
You know, HP channel is down from over 66% last 5 years to a quarter now. I know we've been asking you this, but with sort of a minimum revenue guarantee from HP as well post the Blackstone deal, how do you see that panning out in FY17? Will it be on a downturn? Should we be preparing for another 15 to 20% decline in FY17?
I expect it to stabilize and stabilize at a level based on minimum revenue guarantee and thereabout. And I expect the stability to happen sometime in Q2. I mean, it can spill over to Q3. But I clearly see FY17 to be a year of stability for HP business, rather than the decline rates that we have experienced between 21 to 23% over the last 4 years.
All right. Also, the direct international business has been the growth pillar for you. How do you see that panning out in FY17? Also, because you will have to offset the decline as far as the HP side of the business is concerned.
We are seeing a very good traction in the direct international, and with the good TCV wins in FY16, it gives us the foundation for a very healthy growth in FY17.
All right. Also, want to get sort of a macro view as far as the order book is concerned, and also the deal pipeline. Is it healthy for the coming financial year?
It's very surprising. I see deal pipeline to be healthier than what it used to be. So I don't concur that there is a problem with the pipeline. The quality of the pipeline has changed. It actually goes back to the issue: are you a focused company? Are you specialized? Are you trying to be everything to everyone? So when you become focused and specialized, then what it does is you bring a value proposition, you collaborate with customer intensely, and the quality of your pipeline improves. I don't see pipeline being a problem, especially in direct core. We have a healthy pipeline, as Surya mentioned, healthy TCV. And so I'm kind of bullish on direct core beating the market growth rate in coming year as well.
All right. Two things, Surya, to you. In terms of margins, what sort of an improvement will we see starting Q1? And also cash on books, and what's the utilization strategy like?
Yes. So we had earlier indicated in the second half of FY16, we would be in the band rate of 13 to 15%. And we are more or less been around that. Going forward for FY17, we are clearly looking at good improvement in the margins, and the band for the first half, we are looking at anywhere between 14 to 16%.
All right. Lastly, when the Blackstone deal was announced, I want to now know, it's been quite some time, in terms of, is there a revenue milestone that you're looking at, or a predictable earnings trajectory post the deal with Blackstone?
See, any financial investor would have a financial model. That's why they have invested. So does Blackstone. And it is a joint exercise between Blackstone and Mphasis to ensure that all our shareholders, including Blackstone, gets the return on their investment. We are committed to it. So stay tuned. Once the transaction closes, that innings will start. So this is, I guess, pre-innings commentary that we are having. And we feel confident about what's ahead of us.
Okay, that's the management of Mphasis talking about how numbers have panned out and how it's looking. The stock is also managing to hold out in the positive zone, 1.5% of an uptick coming in. They're saying that the digital risk performed better than expected, and clearly that's evident in the numbers. Move on then and talk about the stock game and discuss our experts' last three ideas. Ruchit, let's discuss UPL, Hindalco as well as Federal Bank. You've placed a buy call on all these stocks. What's your rationale?
UPL I've retained from my yesterday's trading picks. Probably the stock on a broader time frame charts is forming height of high bottom formation and is continuation of an uptrend. Post recent correction, the stock had taken support near the super trend support and is indicating continuation of this up move. For the game purpose, for intraday, I've placed a target of 604. I am expecting the stock to move higher up to 630 positionally. So anyone is having long position should continue to hold. And my next call was a buy call in Hindalco futures. Well, we are bullish in this stock since last 2-3 trading sessions after formation of hammer pattern at lower levels. So after a corrective move near the support area, the hammer pattern was formed, and today it's showing that reversal from the hammer pattern. So probably we are expecting a near-term target of 95 to 96 in this stock. For the intraday, I am expecting 94.5 to get achieved in Hindalco. And my last call is a buy call in Federal Bank. Well, amongst the banking stocks, Federal Bank has consolidated significantly since last 5-6 months, wherein the other stocks in this space have corrected. This stock was in a consolidation phase, and yesterday it has given a breakout of that consolidation resistance. So probably 51.50 was the resistance earlier, and would now act as a support. On the higher side, I am expecting immediate target of 55.5. So then stop loss below 50.5. Even at current levels, one can look to buy this stock.
Okay, that's a view on the rest of the portfolio. Sarvendra, run us through your recommendations, the rest of the stocks that you have, 2 buys and a solitary sell.
Yeah, absolutely. The first one within that is MT Educare. The stock is something that we like. Again, probably this is probably the last day for the game show, but the stock in the medium term is setting up nicely. So we have put our target of 184.40 for the day. And we're keeping a stop loss there at 177.40. But anybody wanting to slightly hold on for a 15-20 day kind of a working day kind of horizon, you can probably look at a target close to 200 for MT Educare, and that is it was a level from where it has probably corrected over the last 1 week. Next one was Jain Finance. There's a new listing. We've got whipsawed on the stop loss, even though the current market prices are higher than yesterday's close, slightly above the stop loss level, but we have been whipsawed and the stops have been met at Ujjivan. But maintain buys on this one for a target of around 304, 305. If someone wants to trade, and probably keep a stop loss below 289 is what I would recommend from here on for Ujjivan. And the last one, the solitary sell, is on Gale. I think that stock clearly forming a slightly short-term, slightly bearish kind of a setup. So what we expect is that stock can fall towards that 375 mark. And that is where we have kept a target at around 375.60 and maintain a stop loss on that sell at around 385.60.
Okay, the stop loss there has been triggered for Gale and some trading recommendations coming in. Let's move on then and talk about Rajesh Sharma's portfolio as well. Indiabulls Housing Finance, Siemens as well as Indian Cements. Rajesh, tell us, what is it that, what's your rationale rather behind picking out these stocks?
Well, I'll take Indiabulls, though I don't track this stock very much, but the thing is that the charts are attractive for this stock, and the stock is now within the a 7 to 8% of the vicinity of its high, so it's meandering there only. I sense that there's a trend developing in the stock, as yesterday only, if you see, the stock cleared its 200-day moving average, and a trend that is developing looks like the likely targets of which looks like the its all-time high levels of 800 only. So that's the reason I chose Indiabulls, and that was the rationale for picking it up. The third one was a buy in Siemens Limited. Well, you come here if you see after yesterday's stellar close of Nifty, in which Nifty got catapulted to the north of 8,000 after a long time. So it looks like likely we are firmly entrenched to test levels of 8,350 in the coming few trading sessions. The rationale for picking this Siemens was simple, that I personally sense that in this next leg of up move in the Nifty, probably capital goods are going to participate in a big way, as the market participants are citing a broad-based economic recovery, and a testimony of that was the the L&T results which we saw a day before yesterday. So as a precursor, and moreover, if you see, the Siemens have been moving sideways only during the last two sessions. It had perked up. So my sense of choosing this and rational was simply that I think if not today or maybe tomorrow, the stock should perform well, and going forward I think the stock should do well. 1250 being a key resistant, otherwise the stock can, after above 1250, the stock can even test 1400 levels. The last one was a buy in India Siemens. The India Siemens stock, on the back of good results, the stock rose handsomely as the profits had increased. The rationale for picking the stock was simple, that the stock has been languishing for a long time sideways, and after a long time the results have been good, and the management is probably focusing on the more on the companies working rather than working overtime and spending time on the cricket field.
Sure.
So they have dispensed the IPL franchisee also.
Okay.
So that's the reason of picking it up, and the charts also looking good for the stock.
Okay, that's the word coming in on India Siemens. Thanks very much to all three experts for taking the time out and sharing portfolio with us on VNS in the stock game. Completely out of time on this edition. We have market sense on the other side. Stay tuned.